Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Welcome to Connecting the Dots from Snarful Solutions Group. I'm Alex.
And I'm Morgan. Thanks for joining us.
It is Friday, October 31st, 2025, Halloween. Hope you've got your costumes ready.
Or at least your candy bowls filled. Quick check on the weather here in Sacramento. Looking lovely. Sunny. High around 78 Fahrenheit.
Nice. Nationally, though, a bit more active. Pretty gusty winds hitting the mid-Atlantic and northeast.
And keep an eye on the northwest later today. And into Saturday looks like an atmospheric river setting up. Moderate to heavy rain, some mountain snow, and high surf expected there.
Okay, turning to the markets, a bit of a mixed picture to end the week, but generally positive overall.
Right. The Dow Jones closed at 47,580. That's down just a touch today, 0.17%.
But still up for the week, about 0.35%.
Exactly. And the S&P 500 followed a similar pattern, closed at 6,867.43. Also down slightly today, 0.17%, but up 0.32% for the week. So holding steady mostly.
And Bitcoin, always interesting to watch.
Yeah, it's a nice little jump today, actually. Up 1.41%, closing at 109,816.66.
But still down for the week overall.
Still down for the week, yeah. About 3.78%. But, that pop today is interesting. Shows there's still appetite there.
Definitely something to watch. Now, before we dive into the tech news, a quick word about our sponsor, Old Glory.
Ah, yes, Old Glory. They're an iconic store for music and sports fan merchandise. Really great stuff.
Seriously, if you're already thinking about holiday gifts, especially for, your tech-loving friends who seem to have everything, Old Glory's got some unique finds.
Totally. And you can get 15% off your entire purchase right now. Just use the promo code SNARFUL, that's SNADRFUL, at checkout.
Find them at oldglory.com.
Okay, let's get into it. Time for our Morningstar Report, the day's top 3 tech stories and what they actually mean for you.
Let's start with Amazon. Huge news out of their Q3 earnings.
Huge is right. Shares surged, over 13% after they just blew past expectations?
Incredible jump. So what drove that? Let's break down the revenue streams.
Well, a big piece was advertising services revenue. That jumped 24% year over year.
24%.
Yeah. To $17.7 billion. Beat the estimates of $17.3 billion.
And that's not just ads on the shopping site anymore, is it?
Not at all. I mean, think about their reach. Over 300 million global ad-supported viewers and listeners across Prime Video, Twitch, MGM, Wondery, Amazon Music.
Wow. That's a massive audience.
It really is. They're a major player competing directly with, Google and Meta now for those ad dollars.
And subscription services, Prime and the like.
Also strong. Up 11% year over year to $12.6 billion.
Okay, and AWS. The cloud business is always key.
Absolutely key. And it had its fastest growth pace since 2022. Revenue was up 20% to $33 billion.
20% growth. That's accelerating again. What's behind that?
Seems to be strong demand in AI, plus their core infrastructure services are still, booming. AWS is really firing on all cylinders.
And they're seeing success in their content, too, right? I saw some numbers on Prime Video.
Yeah, definitely. Thursday Night Football, average viewers were up 16%, hitting 15.3 million.
That's a solid number for streaming football.
And the summer I turned pretty... Season 3 viewership apparently beat Season 2 by 65%. So people are definitely watching.
Okay, so massive revenue growth, booming ads, accelerating cloud, hit shows... But didn't they also just have huge layoffs?
Ah, yes. That's the paradox, isn't it? 14,000 layoffs amid these record results.
How does that square? I saw operating income was basically flat.
Right. Operating income came in at $17.4 billion, pretty much flat. And when you dig into it, you see why. There was a $2.5 billion charge for that FTC settlement.
Oh.
And $1.8 billion in severance costs from those layoffs.
So those two things basically wiped out the gains on the operating income line for the quarter.
Pretty much.
Yeah.
But here's where it gets interesting strategically. CEO Andy Jassy didn't really frame the layoffs around, immediate financial pressure or even AI taking jobs.
Oh, what was the rationale then?
He called it a culture move. He talked about wanting Amazon to operate like the world's largest startup.
The world's largest startup, meaning what exactly? Leaner? Faster?
Exactly. Lean, flat organizational structure, moving quickly. He's essentially saying they needed to cut layers in bureaucracy to maintain agility, especially with AI changing everything so fast.
So it's less about cutting costs today and more about positioning for speed tomorrow. Investing in agility almost.
That seems to be the argument. Paying the severance now is an investment in being able to pivot and innovate faster down the line. It's a bold move framing it that way.
It really is, shedding weight to run faster in the AI race. Okay, let's shift gears to another tech giant, Apple. Also, big earnings news from them.
Yep, Apple reported Q4 revenue of $102.47 billion. That's up 8% year over year. Solid growth.
But the real standout number for Apple, it seems, was services.
Oh, absolutely. Services revenue hit an all-time record, $28.75 billion.
All-time record. Wow. What's included in services again?
That's things like the App Store, Apple Pay, Apple TV, Apple Music, iCloud. Basically all their subscription and recurring revenue streams.
And that growth was strong.
Really strong, up 15% year over year. That's high-margin, predictable revenue, which investors love.
Right. And I noticed they rebranded the streaming service, just Apple TV now, dropped the Plus cert.
Yeah. Simplifying the branding. Makes sense.
What about the iPhone? It's still the core product, right?
Still the core, and it performed well. iPhone sales hit $49.03 billion, up 6%. That actually set a September quarter record for iPhone revenue.
Even with the new iPhone 17 models having some launch constraints, apparently.
Right. Shows the underlying demand is still incredibly strong. But like you said, the services story is becoming increasingly central, and their content plays are a big part of that.
Speaking of content, that Formula One movie, F1, that did really well, didn't it?
It did huge numbers. Box office was, $629 million worldwide? A massive success for them.
And that led to something bigger, right? With actual F1 racing.
Exactly. Leveraging that movie's success, Apple went and secured the exclusive U.S. rights to broadcast Formula One races.
Exclusive U.S. rights.
Starting in 2026 for 5 years. That's a major sports content acquisition. It shows how serious they are about making Apple TV a destination.
So using movies to build buzz and relationships, then locking down premium live sports, that really boosts the value of the whole services bundle.
Precisely. The hardware gets people into the ecosystem, but services, especially with unique content like F1, keeps them there and paying.
Okay, but there's another big piece to Apple's future, AI. How are they doing there? They've been seen as maybe lagging a bit behind rivals like Meta and Google.
That's definitely the perception. And this earnings report shows they're spending heavily to catch up, or at least integrate AI more deeply. R&D spending was up 14%.
14% jump in R&D, and that's focused on AI.
Focused squarely on AI, yes. They highlighted upcoming features like live translation, that workout buddy thing, features that weave AI into the daily user experience on their devices.
But is a 14% increase enough? I mean, if they're playing catch-up, is this just the cost of entry now, or are they really aiming to lead? Features like live translation, others have had that for a while, right?
That's a fair question.
Yeah.
It does feel like some of these initial features are about reaching parity, but the level of spending suggests a serious long-term commitment.
So maybe it's table stakes now. You have to spend big on AI just to keep your premium products feeling premium.
I think that's part of it. They need to deliver seamless, integrated AI experiences to justify their hardware prices and keep that massive services engine humming. The cost of not investing heavily in AI would probably be much higher in the long run.
Okay, so Apple's leveraging its hardware base to build this incredible services record, fueled by content like F1, and now pouring money into AI to protect and enhance that whole ecosystem. Makes sense.
Exactly. Which brings us nicely to our third story. This one is really about the plumbing, the legal foundation for this new AI world. It involves Getty Images.
Right, the big photo agency. They struck a deal with an AI company.
Yeah, with Perplexity AI. It's a global, multi-year licensing agreement. Essentially, Perplexity gets to use Getty's vast library of high-quality images within its AI search and discovery tools.
And the market liked this news.
Oh, the market loved it. Getty Images stock absolutely skyrocketed, jumped over 55% after the announcement.
55%, just from this one deal.
Well, it signals something really important. It's about the legal and ethical side of AI development.
How so? What are the key terms?
The crucial part is that Perplexity agreed to provide proper attribution for the images. That means including image credit and, importantly, a link back to the source on Getty.
Okay, that does sound significant because a lot of AI models were trained on, well, basically everything scraped from the web without permission or payment, right?
Exactly. It's been a huge point of contention, lawsuits flying, debates about copyright. This deal is a concrete example of an AI company proactively licensing content and agreeing to respect creators' rights and attribution.
A shift from scrape first, ask forgiveness later, to license properly upfront.
Precisely. And the massive stock jump shows how valuable the market thinks that legitimate, legally licensed approach is going to be. It builds trust.
Tell us a bit more about Perplexity. They're relatively new, aren't they?
Yeah, founded in 2022. They position themselves as an answer engine, not just a search engine. They aim to give direct answers to questions, but crucially, with citations linking back to the sources.
Okay, so citations are core to their model, and they're getting traction.
A lot of traction. They say they're answering over 150 million questions a week now, and their valuation shot up recently to around $20 billion.
20 billion, wow. Weren't they also the ones who made that audacious bid for Google Chrome?
That's them, the $34.5 billion bid. Most people saw it as a massive marketing stunt, to get their name out there.
Well, it worked. We're talking about them.
It did. And there's constant chatter among analysts about whether Apple should just buy Perplexity to jumpstart its own AI search capabilities, linking back to our Apple discussion.
Interesting connection. So this Getty deal helps Perplexity look more legitimate, more sustainable, less risky legally.
Absolutely. In a field where many AI startups are facing legal headwinds over training data, Perplexity is making deals, paying for content, agreeing to attribution. It makes their whole model look more durable and, frankly, more ethical.
A very important development in how AI interacts with existing content industries. Okay, before we wrap up, we need to thank another sponsor.
Yes, indeed. We also want to thank Scony. They make premium golf shoes.
If you're a golfer, you know how important good shoes are. Scony offers fantastic style, but also real performance and comfort on the course.
Definitely worth checking out if you're hitting the links or maybe looking for a gift for the golfer in your life.
And listeners can get a great deal too. Use the promo code SNARFUL again, SNARFUL at checkout for 15% off your entire purchase.
Find them online at Scony, that's SKONNI.com, sexdanny.com.
Okay, so let's quickly recap the 3 big takeaways from today's tech news.
Right, first up, Amazon. Huge quarter driven by ads and AWS acceleration. But the key strategic insight might be Jassie's world's largest startup, framing for the layoffs, prioritizing speed and agility for the AI future.
Second, Apple. Services revenue hit an all-time record, showing the power of their ecosystem and content strategy, underscored by that big F1 rights deal. And they're ramping up AI spending significantly to protect and grow that services engine.
And finally, the Getty Images and Perplexity AI deal. It's a landmark agreement showing that legal licensing and proper attribution for content are becoming essential and valuable requirements for AI companies. It signals a shift towards a more responsible AI web.
3 really important shifts happening right now. Fascinating stuff.
We're here to help at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.